The FBI launches their own scam crypto to catch market manipulators. Uniswap announces the launch of their own layer 2 called Unichain, and multiple announced airdrops. Welcome back to Dynamo DeFi. My name is Patrick, and in today's video, I'm trying out a new format where I'll go through the most interesting things I saw in crypto from the past week. Reminder that nothing I say is financial advice. This is purely intended to be for informational purposes. Now let's get into it. First, the headline story for today, that is the FBI launching their own scam crypto called Next Fund AI, and using this to catch a number of individuals and organizations that were manipulating markets to scam honest investors out of their money. Before I get into the details, I want to share that this video was brought to you today by Scale. Scale is a blockchain that offers gas-free transactions. They've got a huge crypto gaming ecosystem and a growing DeFi ecosystem. And if you want to check it out, you can today at swell.scale.space. That's Scale spelled with a K, where they have a number of social quests, on-chain quests, and you can earn a variety of rewards for participating in these. Check it out, link in the description. All right, so more about this case with the FBI. The FBI created their own coin called the Next Fund AI coin. And just to be clear, this was a scam coin, but it was a scam coin for the purpose of catching people. First off, you see a token called Next Fund AI, 99 times out of 100. That token is a scam, just, any other details aside. But here's the actual report on justice.gov. So these are the first ever criminal charges against financial services firms for market manipulation and wash trading in the cryptocurrency industry, according to this report. Right. Probably true if it's in the report. 18 individuals and entities have been charged with widespread fraud and manipulation in the cryptocurrency markets. So they made false statements about their tokens and executed sham trades in the tokens, et cetera, et cetera, et cetera. Now, a couple interesting things in here. So what they note is what the FBI uncovered in this case is essentially a new twist to old school financial crime. And I actually completely agree with this. There's this tendency for a lot of people to attack cryptocurrency as uniquely corrupt, uniquely crime-ridden. But in many cases, the crimes that are executed in crypto, they are already crimes. And in fact, because the blockchain is public, with a dedicated effort, it's often actually easier to catch them. And along those lines, here is an interesting thing from Bubble Maps. Bubble Maps is a on-chain analysis service for finding connections between wallets. This is the FBI's fake scam token, and you can see that there's just huge concentration in the supply, where you have a lot of different wallets that had it, and this can create the illusion that it's spread out across many wallets, but in reality it's only held by a few people. And you see this a lot in scam tokens or tokens that are being manipulated. Now, a couple other observations about Next Fund AI. First off, don't scam people. Governments are getting serious about catching this. It's because it doesn't apply to most of you anyways, but don't scam people. The thing about the blockchain is it's permanent and it is public. So if you scam people publicly and permanently, then probably eventually it's going to come back to bite you. Second off, be careful out there. There's a lot of sharks in the water, so learn how to do this sort of analysis like Bubble Maps. I've made lots of on-chain analysis videos on this channel. Learn how to do it so you don't end up the victim of one of these things. The second interesting piece of news that I saw this week is that Uniswap announced the launch of a new layer 2 known as Unichain. This has a lot of implications for the future of layer 2s, for modularity, and for app chains. But to highlight some features that they announced for Unichain, it's a layer 2 designed specifically for DeFi, and it's supposed to have fast blocks of 250 milliseconds, cross-chain interoperability, and a decentralized validator network. Now, a couple of things that I think are really interesting about this. Yes, the fees are 95% cheaper than Ethereum layer 1, like most layer 2s. But one thing is that it's built on the Optimism superchain. Now, if you don't know the Optimism superchain, it's basically a framework for building layer 2s from OP Labs, but some other notable super chains are, of course, Optimism itself and Base. So Coinbase's chain Base, and then there's a number of other smaller ones as well. But you have Coinbase building on the super chain. Now you have Uniswap building on the super chain, and several other major names as well. I think there's a good chance that with this, the super chain is well positioned to be the framework upon which layer 2s are built. And this Unichain is going to have native interoperability with the other chains on the super chain, which will enable single block cross-chain message passing among super chain L2s. So again, the super chain, which has a whole bunch of layer 2s specialized for different purposes, is becoming increasingly interoperable, and Uniswap is positioning themselves to sit at the center of that. Another thing that I think is interesting about this is the implication for the Uni token, since eventually, as they decentralize and they have sequencer fees, it's possible for the Uni token to accrue value that way. And I think this has major implications for the modular thesis. One thing they note here is that this is a modular chain, and relatedly, this provides validation for the app chain thesis. The app chain thesis is basically the idea that eventually most apps will realize that they can accrue more value to their token if they have their own chain or layer 2, which you stake that token to secure. And I would say that whether that becomes a larger trend is probably dependent in part on whether Uniswap's forays into having their own chain are successful. However, this certainly speaks to the fact that many top applications are considering launching their own chains, even if those chains are a layer 2 on top of Ethereum. The third piece of news this week is that Kujira completed their merger with ThorChain. The Kuji token is becoming the Ruji token as Kujira rebrands to Rujira. If you're not familiar with either of these projects, well, ThorChain you should definitely be familiar with if you follow DeFi, because it is the major cross-chain DEX to swap native assets from Bitcoin with Ethereum with several other chains. And Kujira is a Cosmos layer 1 that was notable for having a lot of user-friendly DeFi applications. We've covered Kujira on this channel before, however, not recently. And this combination of Kujira's user-friendly DeFi tools with ThorChain's native cross-chain capabilities has potential to open up a lot of new use cases, and they highlight some in this announcement. Users will be able to access native cross-chain capabilities and high liquidity powered by ThorChain. No need for third-party bridged or wrapped assets. You'll be able to take a loan against native BTC right from your Bitcoin wallet and receive USDC on whichever L1 you choose. So good on the Kujira community for being able to figure this out, and good on ThorChain for both helping out this project and now incorporating this new suite of DeFi tools into their ecosystem. Definitely something that I'll be following in the future. Next up, a couple of airdrop announcements this week. First up, Swell. Swell is a liquid staking solution and a layer 2. They've had these pearls that you can collect for a while now. Well, now you can find out how much Swell you'll be able to claim. I'll link this official link from their Twitter account in the description of the video. Next up, Optimism. So you may not think of Optimism as an airdrop opportunity because the OP token has been live for over 2 years. However, they announced airdrop number 5 this week, over 10 million OP tokens allocated to 54,000 plus unique addresses. So what this speaks to is, first off, if you're using Optimism, go check. You may have qualified for some airdrops. Second, there is opportunity for airdrops even on chains that have already done one in the past, ones like Optimism that have enough of a organic ecosystem to maintain their token value. They may be able to do relatively valuable airdrops. You're probably not going to become rich from any of these things, but it can be a really nice supplement to your crypto usage. On the Onchain Metrics front, I also saw several interesting things this week that I want to call out. First off, Sui. Sui has been trending like crazy recently, and it's translating into increased DEX volume. Over the past 7 days, over $1 billion was transacted on decentralized exchanges on Sui. And as you can see here, in recent days, basically every day this week has rivaled the best day of all time. And if you look at the weekly trend, last week was the best week ever for SUI volume. Also interesting is Solana. Now, we cover Solana a lot on this channel, and people always say, oh, do you still like Solana? Do you still think that the metrics for Solana look good? And I really want to highlight this TVL chart. First, we'll look at it in USD terms, then we'll look at it in SOL terms, as you always should. So in USD terms, we'll zoom into this year. You've had all sorts of hype cycles this year of memes, of other Solana tokens, of the Solana ecosystem. However, even amidst all of that, through the ups and downs, the total value of deposits in Solana DeFi has been growing. And in fact, it's at a yearly high now, and it is rapidly approaching its all-time high. If you look at it in terms of SOL, and I'm going to get rid of volume, it's even more clear that the deposits in Solana DeFi from the past year really have just been in this steady uptrend where market moves up and down, but more and more SOL, more and more other tokens in terms of SOL are going into DeFi, and this has really ticked up recently as well. Finally, to wrap things up, we have the yield farm of the week. And also a quick reminder that I send out a yield farm or airdrop opportunity every single Monday in my newsletter, dynamodefi.substack.com. All right, so what's the yield farm of the week? For this week, it is P-Pods Finance and their new leveraged volatility farming. Now, this is a deep dive from their own Twitter that I'll link here. But basically what this does in a nutshell is it allows you to profit from volatility on your favorite assets. So some people are buying, some people are constantly selling. And with these vaults that they allow you to deposit into, you can actually increase the number of tokens that you hold, the more volatile that it is. And this is the P-Pods website. One thing I will say is that a lot of the tokens that they have these vaults for right now, they're not really tokens that I'm that interested in earning. However, there are a lot of meme coins and things like that that perhaps some of you are interested in farming, and those tokens tend to be volatile, which could make it an especially interesting play. But I just like to see new concepts like this, and it's one of the first truly novel things that I've seen in a while in terms of farming. If you want more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.